So, should we be buying right now? That's probably the big question that everybody is thinking. And this is the video market alert for the week ended April 9th. And we wish everyone a very happy Easter holiday. We hope you and yours are safe. We hope you are healthy, and we hope you are sane. That's probably the two most important things right now, are to be healthy and sane. And so we're doing our best to stay sane. So the week just ended has been characterized by a lot of buying. The market's been going up. And the quick answer to should we be buying right now, should we go in, is we don't believe so. And the reason being that this sort of a rally has happened during the Great Depression before it fell precipitously after that. It happened in Y2K. There was a 4-month period where the S&P, the stock market, went up 20+%, only to be followed by a big drop of over 30%. And then in 2008, the same thing happened also. There was a huge rally in October, November of 2008, only to be followed by a massive fall when it finally bottomed in March of 2009. So, having said all that, if history holds, this rally we've seen here recently is what's known as a bear market rally. It's also known as catching falling knives. And we believe that this is actually catching falling knives with a blindfold on. And the reason why we say that is because we have no idea what the other side of this looks like. Bankruptcies, unemployment, real estate mortgages and rents not being paid. We've never been here before. And so betting on this rally, we think, is a risky proposition. So the answer is not yet. Now, I do want to go over with you one of several things that we think are important for you to know, which is, what are we doing behind the scenes right now? There's a notion or a view that when we sell and we are sitting on the sidelines in cash and money market funds, that there's nothing to do. But let me assure you that I believe we work 10 times harder when we are out or we are selling than when we are riding the wave of a bull market and we are fully invested. So let me go over with you what I'm going to be reporting to you going forward on a bi-weekly basis. The plan right now is for once a week to give you a status report, and then of course once a week is our overview of where the markets are report. So we're probably going to be sending you 2 videos a week going forward. So what are we talking about in our investment committee, and what are all the decisions that we are looking at making for you so that you don't have to? And I actually had to write them down because there's quite a few. So first of all, when do we go back in? Do we wait for our strategy to tell us when it's time to go back in? What if a vaccine comes along before our strategy says to buy? Then what? What happens if our strategy says to buy before a vaccine comes? Do we want to take a chance and do that? So that's an important part. And then the next part of it is, okay, suppose we are going to buy back in. Then what do we buy? What are we going to do, and how quickly do we do it? Do we go all in? Do we go partial? Do we dollar cost average our way in? And what about our bonds? Do we buy those? Do we not buy those? Do we dollar cost average? Are there certain kinds of bonds we want to own versus others? So these are all very important questions that we are talking about in our investment committee meetings on your behalf. And believe me, we are working very hard on all of this. In fact, we're now meeting at least twice a week, probably 3 times a week, to discuss as changes are happening in the economy, as changes are coming along with unemployment numbers and the rest of it, where we stand versus all those decisions. The other thing also is we want to be sure that if we are safe, that we are actually safe. So we're x-raying our money market funds to be sure that what they are invested in is actually as safe as we want it to be. We've seen in the past, in 2008, for example, where the bond portfolios that had mortgage-backed securities in them and those kind of things that were not government-backed, and we didn't like those. So we want to always monitor how strong is our defensive posture. We don't want to let it suddenly change into something else because a manager decided that was a good idea. So we want to monitor that. And the thing that I also want you to be aware of, and I think you are, but just to repeat it, is that the same team the four people that guided us through 2008 relatively unscathed during that period. You know, obviously there's no strategy that never loses any money at all. But for people who followed our lead, the lead of this four people that were leading our efforts at that time, we, for that calendar year, would not have incurred any losses in the stock market because we weren't in them during that calendar year. So that same team is still in place today, managing what we are doing. We have a little bit more gray hair than we did back then, but we have more experience. And so we're making the decisions for you, again, so that you don't have to. We want to worry about all of this so that you don't have to. Okay, so long-winded, but just wanted to let you know what we are doing behind the scenes to, you know, make sure that we're on top of what's going on, the decision-making that we're going to do. And I'm going to, in our weekly videos, keep you posted on where we are on all of those things. All right? So thank you for watching this video, and we hope that you are healthy and that you are sane. And we will talk soon.